Hi, it's David here with Futures Trading. I want to answer a couple questions that I've received since the last video. One about value. The other is which video do I start with on the channel? All right, so kind of address both of them. And then also, I want to welcome the newest subscribers as well. Thank you guys for joining me. It's been quite a few of you who have joined the channel since the last upload. Also, the last upload, before I do that, the last upload, I got like 3 likes and there's like a ton of views. All right, so we had like 168 views, but I need my subscribers. This is not for you new guys that have joined, even though there was quite a few of you that joined. But my old subscribers here, if you would, we've been touching on this, and I want to say it one more time. Even though you may know the content, do your best to support the channel, because if I gave you information that can make you profit, okay, by understanding any market or any time frame, be kind enough to let the algorithm know that the information is useful, and so that way they'll suggest the video to someone else, and so we can further, push the content. It's all about aligning ourselves to things that we will want for others and not just ourselves. We don't want to be selfish, so make sure that you're hitting the like button. All right, really important that you do that, because I'm trying to give you an inside look at what professionals actually do when they trade. It's not complicated. It's very, very simple. It's not dense. It's simple. And I want to make sure that you can see that. So do your best to share the information, align yourselves with that goal, because that's what I'm here to do. Even though in January, I do plan on, of course, dialing my videos back, because my goal wasn't to be on here and make a long term journey of this. All right. I just wanted to give the public something simple to look at, something that you can straight away pull up a video and begin to learn how to look at the markets in a procedural way. I want you to know that it's important that you look at it from a perspective that it never changes. Because when you want consistency, you need to implement consistent activity. You can't do, a lot of different things and expect something consistent to come from it. This is important. All right. So I just want you to go ahead and, if you can, my subscribers, those that have joined, be an example to those that are coming on board. Comment. You can do that as well. If you had a good day, just say, "Hey, good day," and that will go a long way to get the content out there. All right. So without any further ado, we're going to talk about that volume. We're going to talk about what video to watch. So I'm making this one for you, the new subscribers that have came on board. Watch this video, because I'm going to cover everything in it, everything that I possibly can. We're going to do real time. We're going to use Bitcoin, of course, because it's the weekend, but it's all, of course, applicable no matter what market time frame you're looking at. Now, clearly, I don't do any intros. If you're new to the channel, I don't do any intros. I don't feel like sensationalizing trading. I think that you can end up in financial ruin, and I'm not trying to attract you to do something that can ruin your financial future. So I don't sensationalize videos. I am not going to plaster my face all over the videos, because I'm, again, not interested in, boosting my ego. I want you to learn. That's important. So you don't need that. I don't want to tell you information for 30, 40 minutes and only mention maybe one thing that you can use, something that I could have told you in 30 seconds. Please make sure that you understand what is here. Understand what is here, because I'm trying to give you complete context. This is not, a YouTube personality. All right. I am someone that has done this professionally for years, and I want to make sure that you understand that. I'm not here to entice you to be a trader. I won't buy subscribers. I'm not buying any views. I'm not buying likes. I'm not doing anything. All the deceptive behavior that's out there to deceive you into becoming, I guess, interested in a channel. I don't want to do that. Plain and simple. I don't want to do that. All right. It's necessary that we get a foundation that you can trust in. Okay. That affects your trading. It affects your trading. The information that's here will translate into your trading. So if there's any other YouTube, personalities you're watching, because I'm not one, but if there's any other YouTube personalities that you're watching, and they're filling you with sensationalized information, egotistical rhetoric, if they're doing any of these things and you go to trade and you're not able to see the chart clearly, you have to go back to the source of where you got that information from and evaluate, are they telling you things that can inform your mind? Can they make you consciously aware of what's transpiring on the chart? Has nothing to do with the personality of the individual that's delivering the content. So we got to remove the ego out of it. It has nothing to do with enticing you, because when you're trading, the market is intimidating you. It's not trying to entice you. It's doing something opposite. So we have to make sure that we, I guess, narrow the focus and get you to look at the chart for what it's actually doing. That's what I'm here for. All right. So I just want to state that to you so you'll know what you're going to encounter if you're a new subscriber, what you're going to encounter by being here. You can go back to all my videos, no fancy intros. If you look at my thumbnails, all of them are of the chart that we went over. So I'm not trying to, hey, this new method in 2023, 2024, first $1 million. I'm not doing any of that stuff. It's not professional. It's just not professional. So let's dive into the charts. And again, welcome. I'm glad that you have come on board. Now let's look at the static clusters. All right. So we're going to look at some numbers here before we dive into the chart scale. Because I did, and let me tell you where this is at in case you want to go back and you don't want to watch this video because it's going to be a little longer. The primary focus of the channel is this price action method, the trend, and then of course the turning point. So the universal chart scale, universal trend, universal price action method. If you're winning, all of this information will be in that winning trade. So it doesn't matter if you're using volume because volume is subjective. It can change depending on what market. It can change based on what time frame. And so I'm trying to give you universal approach, and we're going to talk about why that's important. So the primary focus of the channel is here. So if you don't want to watch longer videos, I suggest you come and just take in this information. You get about 40 minutes right here that'll teach you how to trade. Now, this video will be roughly about 40 minutes as well, but I'm gonna cover what's in these videos, and there's going to be some more of the content available. So you just want the turning points, you can stop the video right now, just go right here, 18 minutes, and grab the turning points, and you can be done with it. If you just need to know what a trend is, you can go right here. I don't use any indicators when it comes to trend, none whatsoever. You don't need to do that. And then, of course, the price action method, you can just grab that if you just want an entry. You can go and grab that information. You don't have to watch this video because it's going to be about 40 minutes. So depending on what you want, you can just grab just a few minutes of any of that content. And then I also have started just a small series, and I believe I'm have to put this video in here as well. But how to take the universal approach and just with the absence of it not being there, how to get your information for turning points. Now, there's so many other things I can tell you about turns, but we're going to just kind of just touch on how to get the universal approach to kind of give you, I guess, an insight as to whether or not the market will flip. It's the function of you turning on the light and then cutting the light off. It's the function of you opening up the door and then shutting it. So the price action method, it functions the same way. If you apply the price action method for the trend to go, okay, the minute that that price action method isn't there anymore, there should be the trend failure. It's really simple. We don't want to make trading hard. We're looking for universal approaches to the market. All right. So don't want to watch the longer video. Those are videos you can check out. Now, static clusters. So we're going from 15 to 25, 85, 95 back to the 55. It's really important, just depends on which direction you're headed. Now, before I go back in the chart, I'm going to show you this. This is where they're at currently. So when they come up tomorrow, they're here. They can drop back down. They can maybe even go in here and then go up, or they can just go straight up. And this is the bottom. All right. So you can pick and choose whichever one makes sense to you. And that's what you got for the statics. All right. Now, let's kind of go back. I just did just one day with the static levels because I want to talk to you about the chart scale. But I did want to implement the static levels for you. And we're going to go back to, let's see about when did I put it back here? No, I didn't put it back there. All right, so about right here, yeah, about one something before 3 o'clock, before that 3 o'clock marker, London session kind of came in. Want to just put that information there. So they were coming down clearly. They were coming down. This is before price actually turned and went the other way. They were coming down. You would go 55 because 55 is the target. Now, if you look over here to the price axis over here, all right. So if you look over to the price axis here, that's 55.00 down to the 45.00, and they managed to poke their head right outside of that. All right. So by them doing that, you would then look for the sell side of it. And so you would go up from 55 up to the 65, and then the stop would have to be one tick outside of that zone. And then, of course, they pushed up there. Now, from below, They were coming down. They just didn't quite get there. All right. So they just didn't quite make it here. Let me just slide this over just a hair. They didn't quite get all the way down to that 25, okay, down to the 15, and then the 15 down to the oh 05. And so you would, when they lifted up, it would go 25 to the 35, would have stopped one tick outside of 35, and they poked their head right outside of it. The moment that they do that, oftentimes they should head back up to the 55. The 55 would be here. So the 55 would be here, and you would have your stop one tick outside of that 65 and see, can you aim it back down? They managed to get through that 65. So they supposed to had continued up. But again, this is just the static approach. There's three different approaches I'm trying to introduce to you for turning points. I'm gonna show you the ranges as well, so that's next. But this is them breaking their that zone, and so they needed to go up to the 85. So the 85 was the next expected zone for them to go to 85 to the 95, but they didn't make it. They turned around. When they turned around, the zone is still important. You just again reference the information as they're headed back this way. They came back down to the 55. Your stop's supposed to be one tick outside of the 45. Now, this is me giving you this information minus the trend. All right, minus the trend. We're just talking the statics. All right, that's what this section is all about right now. We're just talking about this. And then, of course, you would again build that zone again to see if the trend, or if you will, the statics will hold it. All right, now they, of course, jump back up here. Didn't quite get all the way to the 55, came back down to that 25, down to the 15. Remember, that's important. Got close to it, but then ran back up close to that 55 and just didn't manage to get there, but then turned around and, of course, put that trend back this way. Fell through the first zone, which is that 25 down to the 15, and then the 15 down to the oh 05. Went on and kind of, blew through both. It was 930, turned around and went up. All right, they went up here, and then, of course, they did not remove this trend. If you want, you can go with the market structure video where you can take out one leg, just don't take out the second leg, or just the center of the trend itself. We're going to talk a little bit about this information that I'm going over now, but I just want to give it to you because we're looking at the NQ. And they went up to this high and they didn't break it. I'll show it to you. High here is 53.50, high here 53.50 to the tick, turned around, and then they begin to come back down. Now, remember, I told you if they go through the zones, typically they owe you the next one. They do. It just often depends on how the flow is being traded. But needless to say, once they validated the zone, you do supposed to expect the next zone down. They managed to come back in, regard the zone, and then pull up. Of course, shake everyone out of it. Uh, tick right outside of that 25 up to the 35, came back down, and then start using that 15 to the 25 to break through the zone to get down to the 95, down to the 85, and then the 85 down to the 75. All right, so that's the cluster information there, and for that target. Now, they rotated back up clearly. You can see that, and we kind of took a look at that information already. Now, let's talk about the chart scale. All right, so let's talk about the chart scale. I'm going to get rid of these zones, and let's talk about the chart scale. All right, now let's get rid of the zone. Let's look at the chart scale itself. When you have your chart, and I want you to know this is very simple, from here to here, okay, that black frame, the frame of the chart itself, the frame, okay, don't worry about these numbers per se. Don't worry about that. That's information, but we're not worried about that with this information here. What this is doing is kind of giving you an idea of what's happening with this, the timing. This is all about the timing of it, because that's their main goal, is to throw your timing off to make sure that you do not get that part right. It's invaluable. And so I'm trying to help you with something that's invaluable. Hit the like button. It's really important that you do that, because I'm giving you some invaluable information. That means priceless if you don't know. It's priceless for me to tell you about this kind of information and you won't take the time to hit the like button. That's really, really non-professional behavior. If you don't understand etiquette, I don't understand why you wouldn't. But if you won't, I did put the definition here for you because I love reading the dictionary and I like to inform others of what's needed in order to have a well-rounded personality, or if you will, a character. All right. So etiquette, the customary code of polite behavior in society among members of a particular profession or group. So that's important if you want to be a part of the profession that you celebrate others. Everything I'm trying to show you is procedural knowledge when it comes to universal. So now I'm about to show you something that's universal. All right. Relating to an established or an official way of doing something. The doctors, the lawyers, the mechanics, the scientists, the physicists, they all have proceedings or procedures that they implement, and it's this same thing over and over and over again. All right. It does not change. It will not change. They have to keep doing the same thing. And that's what makes it the official way of doing something. And so what changes the results that most traders get, so you may have a trader that's getting this result, another trader getting this result, is because of the content. It's because of what they're using. It's because of what they're, doing with the information. All right. So the chart is just information. What you do with it is important. Now, it's information. And I want you to know, and I tell people all the time, because people say, "Hey, I'm looking at the market. Do you know how to read the market?" There's a way that you read literature. There's a way that you read, and you can go take time to learn it. There's a way that you read literature, and I teach people that there's functions to reading literature. It's four in total. There's well, actually, not just four, but there's four primary things that I teach that tells you how to look at a chart. And so when you look at the chart, it's information. And so there's an official way to do it, and that's why people struggle with trading because you have to get in tune. It's just like the light switch or the doorknob. When you cut the light on, it does something. When you cut the light off, guess what? The absence of what it was doing is no longer there. And so the opposite shows up. And so that's the official thing that's happening. When you open the door, you're able to go in, you're able to go out. When you shut the door, you can no longer do that. It's the absence of the thing that was there before. And so when you look at the chart, you have to do pretty much the same thing. You have to every day look at the chart and implement the same thing. You can't go and change. I think adaptation is important, but when you implement adaptation, you need to be making sure that what you're putting in that place is relative to what it's already doing. All right. So that's a whole nother topic. Don't want to bore you with that, but I want you to see the chart very objectively. Again, this is timeless, and that's what this scale is doing. It's giving you information moving forward. So it has nothing to do with hindsight. All right. So everything to do with the hard right edge of the chart, that's what this chart scale is doing. It's going to help you read where it could possibly turn from. Just possibly. All right. Now, it's universal, so it'll work on any market, any time frame. And as I scroll the chart, I want you to take a look at the chart scale. You're going with the center of the scale. And if you would like the template or the indicator itself, this information can be provided for you. The chart scale and the ranges, I'm going to show you the ranges next, can be provided for you for free. You can get the chart scale and the ranges. If you're a NinjaTrader 8 user, I'll send it over to you for free. All you would have to do is use the link below the video and I will send it straight away to you. If you will want the indicator, there's a minor cost associated with it because I coded it. And just like all my other indicators, they're all price action based for the most part. And I want you to know that that actually requires just a little bit of effort there because it took me effort to make them, and I won't give them away for free because they do come with my training. There's so many of them that comes with my training, and so I'm willing to release this no touch, no close one. Or you can just code it yourself if you have that ability or would like to. Go ahead and knock yourself out. But if you want it from me, it has a lot of different functions. There's even another version that comes with the training that's filtered. So, but you're more than welcome again to create this indicator if you have that ability to do so. But if you want the indicator, you can email me, let me know you're interested, and I will get you this as well. Now, I'm not here for that, so you can just get the chart scale and the ranges because I'm not here for that. But if you want to look at your charts like I look at mine, well, actually, I have a few things on mine that you won't see. But if you want this indicator, you're more than welcome to have it. Now, as I scroll back through the chart, I want you to look at the center of this chart frame. Now, remember, this is the frame from top to bottom. Even though the prices move up and down, and then your candles, of course, they move a bit too when that happens. Don't do that. It's like a magic show. They're trying to trick you, try to make you look, at the movement of the candles more so than the frame that they have to present the information. So if the market is going to turn, this is something you can just think about. If it's going to turn, it's going to turn in front of you. And so the chart frame never moves. It never moves. It's always in front of you. So if the market is going to turn, even though they're trying to mess with your timing, the fortunate part of it is this is that they're going to turn it right in front of you. So utilize the information that's right in front of you. I am the pioneer professional of this method. You've never seen anyone do it as of yet. And so I want you to know, take the scale itself, just divide it in half, and make sure that you do not you do not consider the fact that this portion is moving. You just look at the center of the scale and say, hey, if it's going to happen, it should happen right in this area here, or possibly up here. Now you'll take the mid to the top and then divide that in half. And if you're down here at the bottom, you would take the mid to the bottom and then again divide that in half, give or take. All right. So now let's take a look at this in back in hindsight, and then I'm going to show you the ranges, and then we're going to dive into that other information. All right. So just a little bit of it here. I'm gonna scroll forward, and you can begin to take your time to take in that information and just see how the market turns or responds to the levels here. Now it's just again just looking at the chart scale itself. All right, so I'm gonna just kind of scroll it forward. Again, the chart will adjust. It will, but don't you, okay, be taken by that and still look at these locations as places where the market will turn. All right, so and you can pause the video, go back, you can do all of that, everything that you would need to do, and you can go and do that. Now, typically the center of the chart is where they're headed. Remember, that's where they're pretty much headed. If they're going to turn, they're headed that way. All right. Now, as they come up, you can use the bottom of the scale or right here to the center is where they're headed. Now, sometimes they'll just come to the bottom right here and then they'll take off again. That would help you to know that it's possible that they may keep continuing down. All right. So I just want to give you a little bit of information on how to look at your chart very objectively so you don't have to straight away learn a lot about market structure and what's your higher time frame, what's your daily bias. You don't have to do all that stuff. That's not necessary. Take your one time frame, make sense of one time frame, and then trade that effectively. Take your one time frame, trade your one time frame effectively, and then go to a different time frame. And self similarity, it should show up there as well if you're using universal concepts. It's really, really important that you understand that. All right. So professionals do it like this. All right. And I've been, again, trading for many, many years. I'm a self taught trader, threw away a lot of money, blew out several accounts, not just one. I even made a video about that. I'll show you where it's at if you're new. I'm going to show you where it's at really quick. It's in the must watch list right here. Why blowing out an account makes sense. Why blowing out an account makes sense. You can go ahead and take a look at that, and I'll explain it to you using an encyclopedia and explain it to you that it's necessary that you do so. A live account, real money in 9 minutes. You can learn why it's happening, and I want you to know it's okay. I had to do the same in order to learn all of this information, and I'm trying to give you just some fundamentals, some simple, basic stuff right out the door at no cost to you. The only thing it would take is that you take the initiative, watch the video, and learn the material. All right, so that's that. Now let's take a look at the ranges. Again, you can get the ranges and that chart scale for absolutely free. All right, now ranges here. This is an indicator code. Is really simple. Just giving you a trend effect. That's all. So ranges here. Okay, you have the times up here. Let me kind of move this out the way so you can see it. 12:15 a.m. That's Eastern, and that's until 1:45 a.m. Eastern, and then 6:15 Eastern until 7:45 Eastern. I mean 7:45 a.m. Eastern. All right, so the first range here is the gray range. That's the 12:15 to 1:45. So it's giving you the overnight. So if you're trying to find your daily bias, you can use this if you would like. Okay, just use this. It'll make it simple for you, and you can get an idea of what you may do for the day. How to trade the range is quite simple. I want you to know it's not anything complicated. Just use this means right in the middle. That's center right there. And I'm gonna scroll through the chart here. Matter of fact, let me add a few days here. I'm gonna scroll through the chart here and you can kind of get an idea of how this information works. Let's do about 30 days. Let's just do about 30 days here. All right, and you'll want to use the mid of the range. And again, it'll work in any market, any time frame, doesn't matter. And then of course, 6:15, right before 9:30, 6:15, 7:45, just use the mid of this range. And you'll find collectively what your day could end up looking like. So let's just kind of scroll all the way back and then we'll go forward. All right. So let's kind of scroll all the way back here and then we'll kind of go forward. And again, it's 30 days. I just loaded. You just saw me do it. All right. So the means right in the middle. And of course, you can, if you someone that like to catch counter trend moves, you can do that as well. We're going to touch a little bit on how to do that. And there's that means just getting hammered right inside that range, just getting hammered. This is the NQ. All right. And we're kind of operating below that range for that day. There's a gap up right into the range above the means. Here comes the next day above the means, off the means down to the means of the overnight. All right. And then we came back up, ran away, only to come right back to the means, kind of go back and forth between both. And I'm not going to scroll through all 30 days, so don't worry. You don't have to sit around for all of that, but I am going to scroll just far enough for you to kind of get an idea of what these ranges are capable of. And again, there's actually two more that comes with my training, among a lot of other information that is not available to the public, and it's really, really simple, and it's just as robust as the things that I'm releasing to the public for free. All right, so here we go. And so you're more than welcome again to this information. And yes, you can get the ranges for free and that chart scale. Absolutely. All you have to do is email me. And if email you the information, if you don't mind, just say thank you. Just send me an email back saying thank you. I like the proper etiquette. That's all. I want people to practice civility, learning how to be kind to one another, be thoughtful, considerate, all the things that make for a refined character. That's all. A lot of times people will receive stuff or information for that matter and they won't even say thank you. They won't. They won't hit the like button, won't take the time to comment and say, hey, I appreciate you pointing this out to me. It actually has changed my trading around. And I want to see more people do that. I do have some supporters here, but it's not proportionate to those that's taking away the information. I would like to see you guys just think about who you want to be in life. That's all. Just think about who you want to be because the world do not need any more selfish people in it. All right. That's kind of the problem right now. All right. We want to kind of get away from being that way. I'm an older fella and I think it's necessary that we begin to just evaluate what we want to see in the world, start being what it is that we want to see. Just try to be it. It'll be one less individual in the world making the world a horrible place to live in. All right. So all right. So that's pretty much what you got. All right. Now that you've seen that information, now that's the range. Now let's talk about the trend. Let's talk about the trend. Then we're going to dive into some of these other price action signals that's here. The thing that's only available is of course, the not the H's and the C. The NC and the bar color and the levels are available to you along with some other functions. But the H that you're seeing, the C that you're seeing, that is not available. All right. That comes with training. All right. And there's some other indicators that I have coded. Now, but for the trend, we're all about the trend, all about the trend. I'm gonna just touch on this really quickly here, and then we're gonna go into the real time, and then I will let you go. So we got to get 7 higher. So 1, 2, 3, 4, 5, 6, and did we get our 7 over here? So that's 7. That's 7 in total. You would do this. It's really, really simple. You would measure the 7. So if you're new to trading, you would measure the 7, and it will give you your expected paycheck. So how much you are going to make. Now they can go the 7 off there, or they can go the 7 off the center of the trend itself. Okay, give or take. All right, so center of the trend probably be roughly right about here. So they kind of lean back. All right, so let's do that. They kind of lean back to the center on the 6 bar there. They lean back before giving you the 7th bar. Right, but they made the trend distance here. Okay, so they made it here from the pullback. So this is the trend distance. They made it here from the pullback. They didn't quite get up there from off the trend bar. So it's only 2 places you can go with the trend distance. All right, so you would go off the center of the trend itself, and we're just using 7 bars, and they all have to be higher than the prior. You do not count the ones here. Okay, you don't count them if they're not higher than the prior. You don't count these two. It have to be higher than the prior. I have to say that it has to be higher than the prior or lower than the prior. And we'll look at the downtrend one, so you have an example of that. And then we're gonna go into that real time. All right, so center of the trend here, okay, center of the trend here, they kind of again gave you the 6 one, then leaned back, and then came and gave you that 7th bar here. You do not count any of these in the in between here. You need 7, one that's higher, and then that's your trend. You project that distance. Can they still go up there? They can come up on tomorrow and get up there. They can if they want to and don't want to go down. So you would then expect this to show up from where they're at. So you will go here upward, and that would absolutely put them here. All right. So I want you to know that. Now, when it comes to the center of the trend or possibly off the 7th bar. Now, clearly off of the 7th bar, it just depends on if there's that price pattern near you. Okay, so is it a price pattern near you? It is. It's right here. You got a no close level here. This is even a no close level here. And then there's your hard stop. So that would have allowed you, should you have wanted to take it near your 7th bar, okay, you had the no close level here. They kind of closed beneath that one, but then you had this one here, and that's a no close level as well. They came down, didn't close beneath it. The green bars is the hard stop with the level. So the green bars is the hard stop with the level. What is the price pattern? All right, and let's go over that really quickly here so you'll know. You get 2 bars here. Okay, so we get 2 bars. Let's kind of move this up just a hair. And then let's go with this one down on below. So I'm kind of do both of them, but using the same bar. All right, so we're going to do this. This is the bar pattern that you're looking for right here. It's a universal bar pattern. It'll show up in any winning trade. It doesn't matter what you're trading. It doesn't matter. Don't matter the time frame. It doesn't matter. Professionals don't do all of that. We could take a chart and again use the information that's provided. If that mid is below that bar's low, now I don't care if this bar red, green, it doesn't matter. If that mid is below that low, this market can go down. If this mid is above this high, I don't care what color this bar is. If this mid is above that high, this market can go up. It's just that simple. And so you look for, after you get your framework, okay? After you get your framework and you want to get that paycheck because this is your paycheck, they're offering it to you once they make a trend. All right. Now, what is a trend? You got to look at time. Time is a trend. All right. And that's really important that you understand that. It's the continued sequence of existence and events that occur in an apparently irreversible succession from the past through the present and into the future. All right. So that's really important that you understand this. I'm trying to make sure that you get procedural knowledge. You need procedural knowledge in order to be a professional trader. You want to make sure that the information you can implement it over and over and over and over again every time you pull up a chart, and you can immediately look at the chart and say, hey, this is going to show up every day. There's always a trend. I want to say this, there's always a trend no matter what anyone is telling you online. The market is always trending because it's fluid. You would have to change your time frame possibly if you want to go up and the time frame you're looking at is in a downtrend. Change your time frame. You can go all the way down to a tick chart. It's trending. The market is always trending, no matter what anyone tells you. The market is always trending. You have to pick a time frame that's suitable for how you want to enter it and how fast you want to get out of it. That's important. So this price pattern is here, okay, and it was located right around the center of the trend as well. So even if they would have, dipped back a bit further, you just don't want them to build a trend back in this direction because then you'll get the fight. But remember, the trend is an irreversible thing. All right. Now, which trend will hold just all depends on participation. The sooner the bar pattern come in, this is your real participation right here, that universal bar pattern. The sooner this show up, the much more likely your trend will work. That's important. I want you to understand that. The sooner that this show up, it's much more likely for your trend to work. Just want you to know that. All right. So now let's go take a look at the down because I showed you the up. All right. So let's look at the down. And matter of fact, let's use this information that they did at 9:30. All right. So they pushed into this high from over here. See how it showed up kind of fast and they made that trend. They didn't kind of get it going fast here, but it still made that trend down. All right. So now let's do that. Let's do that. Let's count our trend down. Let's do that. All right. So now let's go like this. One, two, and they all have to close lower than the prior. One, two, three, four, five, six, and there's seven. All right, so we got seven there. You would measure that distance. All right, so from there to there, that is your trend. All right, so that is your trend. And so now you would measure that distance again, give or take. And so that would be off the seventh bar, that would put you here for a paycheck. All right, now off the center of it, let's get that distance and project off the center. They didn't pull back to the center, if I'm correct. They didn't do that, but let's go center about right in there. Now let's get our center of our trend. I'm gonna just get a horizontal line for this one because I don't want to have to draw it. All right, so let's do that. All right, so now off the center of that trend, they go to 9:30. They didn't manage to get back up to the center, with this drop down here. They didn't get there, but clearly you can see that they gave you that distance. They even went the trend distance without pulling back. All right. So when they pull back again, you're still committed to that same distance. The 9:30 kind of came in here. So this move here, and it's something that you can definitely take with you here. 9:30 was here. Okay. So now you get trend distance with volatility. That's different. It's not the same. All right. So now when they lift up and stop and decide to turn around, that's how far it will go. And as you can tell, here it is because they didn't break that high. Now, again, if you're not going to take out this trend, you have no choice but to go back down. It's irreversible. So if you're not going to take out that trend, then you use the volatility distance. All right. So this is the 9:30 bar. It pushed up, okay, and took back off. All right. So when it pushed up, created this red bar, it pushed down. There's the distance that you can expect it to go. All right, so now let's take a look at some of this other information. We got Bitcoin here, and we're going to do this for a few minutes. I don't want to hold you long. Now, I'll touch on this because I kind of did this in this video as well. So I'm gonna kind of throw this in there for you. So I did this in this video here. So if you're someone that likes some of that fair value gap stuff, I want you to know that the price pattern I'm teaching you, and again, I've been teaching for many years, it shows up before that box show up. So before the gap shows up, this price pattern I'm going to show you, it's there long before that box show up. I'm going to show you that. So there's those boxes, and there's a version of this that comes with your training that's actually filtered. All right, so you'll see boxes that means a lot more than the boxes you're seeing currently on the chart, and there's some things that it would do that will let you know that. All right, so now let's see if we have a trend off of this high, and then we're going to dive into the C's and the H's. We're going to talk about that because that's information I've released to the public too. So now let's do that. Let me make sure. Let me get this. Matter of fact, let me take the text off the chart for right now. So let me just take that background off for right now so I can see these bars really quickly here. We're going to go here. We're going to go, there's one red bar. There's, got to stay in draw mode. For some reason, I didn't check that. That's one red bar. That's two. That's three. Let me get my crosshairs. I don't want to be wrong. And this should kind of sum up almost all the content that I've released since I've been on here. So if you're new, this should get you caught all up. This is 4, 5, 6, and there's 7. So they have made a trend down. All right, so this is a trend down. So you would go from here to here, and then you would do it one more time. And then we want to talk about the C's and the H's. All right, so that should put them right about there. Now off of the center of the trend, because notice they lifted up before they made this trend down. Off the center of the trend, you can kind of see that they actually did that distance from the high back down here. But let's do this. Let's just do this. Just in the case that they really want to do the center of the trend. I'm gonna just put it on this side. So that would put them roughly down into this pivot right here. All right. So kind of came in immediately. Again, this is Bitcoin. Though, I'm gonna be honest with you. Bitcoin, their bars are, pretty much committed to that no touch method. They're committed to it. But this is Bitcoin. Now, they pretty much made this distance. If you were to go from up here, if you were to do that, you'll see, yeah, they definitely made that distance. But let's do that. Let's do that just in case they want to turn from there and then turn back around. Now, the boxes, you'll be able to see the boxes pop up here. But notice that the price pattern, and I had a price pattern on this chart as well. I just got to compress down, but you'll get it. It's the NC and the level that's already there before the boxes show up. That price pattern will be there. Again, been trading for many years. It's really simple, and I want to make you aware of it. That's all. I want to make you aware of why you're seeing the box, so you can be a part of the information and not getting into it when it comes back this way. You don't have to be in it when it comes back this way and then hope that it'll turn around, because then you're disregarding the flow. You want to make sure that you're going with the market, go with the information. In order to go with the information, you use the price pattern. And I'll put it here for you really quickly. We're going to just put it right here so you'll know. All right, so we're going to do this one more time. Really simple stuff. Don't want to make it complicated. If you're new to trading, this should help you. All right, so we got our mid here, we got our mid here, and this will help you see that the information here is going to show up before the box. We just want that mid to be above that high, it should go. We just want this mid to be below that low, it should go. All right, now the black line here, this black line is the mid of the current, well, this bar here, current bar trading. It's the mid of the current bar that's trading. If it gets above the high of this bar, it can go up. If that mid, and let me open this up just a hair. If this mid, if this mid is above this bar's high, it can go up. If that black line, that mid, falls beneath that bar's low, it can go down. It's really simple. If the mid remains inside of this bar, you're going to get what you don't want, and that's that back and forth. So you'll get this. So it's the opposite. It's like the light being cut on, cut off. That's all it is. So if you want it to go up, you want the mid above the mid of the current bar, the mid of this bar, you want it above this high. This is just that simple. If it do not get above this high, you're going to get this and possibly that. All right. Now, you want that mid below this low. If it don't get below this low, you can end up possibly getting this. It's really simple. So if you want to know how to gauge chop, when the market can begin to chop you, if you want to know when that can show up, see how the mid is falling beneath this low. This bar should turn red. This should be an NC. It can possibly offer you, well, never mind. Before the bar closed, they rushed it back into this bar. They rushed it back into it. So are they going to give you some more of this? Let's see. Or will they just go ahead and take off? Will they go ahead and take off? But that mid, the mid of the current bar, this is something I want you to know. The mid of the current bar. Now, this is the current bar. Get ready to start. We know that that mid was still in here, so they may do a little bit more of this. If not, you just want to see that mid get above here. No sooner the mid of this bar get above here, that's the hard stop. This is the no close. Take it in that direction. Now, I know in the last few seconds, they hurry up and pull that mid right back in there. So, yeah, if you would have jumped that, it would have absolutely clipped your stop. It would have got you. See how much time, and you'll notice definitely with the NQ, because that's what I love to trade. With the NQ, they'll stall you out. They'll play with you, or even at times get the mid above the bar and then hurry up before the bar closes. Kind of like this, before the bar closes, get the mid back into the bar, and then all of a sudden they're stalling you again. So this may help you a bit. Now, again, here's the mid just sitting at the high, and of course, this bar is acting like it don't want to go. Will it still be an upside move? It could. It could. It's not to say that it can't. It could be, but we got to see now. There's the trend. If they're going to turn back up, you look for the no close level. Okay. Look for the no close levels, the hard stop, see what can become of it. So we have one down here. They didn't get to it yet. And we had the no close level up here. We have one here. Let's see if they'll respond to this one here. And then we're going to talk about the C's and the H's. And it's really simple. Again, that's something I released to the public. So it's really simple. This is a no close level. You had a couple of them in here, but they kind of blew right through them. Now, this is the C. Now let's talk about the C really quickly here. It's nothing complicated, I can assure you. This bar right here, this bar, well, actually it was this red one. That's why it showed up. This red one here, okay, we had two closes above the high of that red one. That C will show up and say, hey, they shouldn't get back past this bar. All right, so now let's see if that'll be the case, or are they going to actually turn around and regard this no close level? And so wherever you see a bar, and I'll draw it out for you, and just in case they don't want to give me the scenario over and over and over again, if you get a bar, and I, again, don't care about the color, don't matter to me what color it is, and neither of these bars either. But if you get two bars closing beneath this bar's low, it don't have to create some box. It don't have to do that. If it gets two candles beneath that low, it can offer to you more movement. Okay, it's really simple. So if you're looking for a scalp, if you're looking for a longer move, if you wanted to go further in that direction, just see how many times that can show up. That's all. And so with here, same bar, I don't care what color it is, it doesn't matter. If you can get two closes above the bar high, okay, right above that bar's high. If you can do that, and again, it don't have to create a box. It has nothing to do with that. It's really simple. If you can get that to work, then guess what? It should offer to you more movement in this direction. It could be a scalp trade. It could turn into a whole nother move. It absolutely can. Totally up to them how they want to do that. Now that's what's making for the C. Now, what makes for the H's and the L's? You see the H's and L's on the chart. What's making for that, and then I would absolutely let you go, is this. You get a bar, same thing, same thing. Don't matter what the bar is. Remember, everything that I'm trying to show you guys for free, for free. It's very simple, and we don't have a lot of rules that we have to implement. It's really simple. This high, okay, this high of this bar, I don't care if it's red, green, I don't care. It doesn't matter. We just want to see these two highs, okay? We just want to see both of these highs, okay? Now, it don't matter if well, clearly this would have to be red, hopefully, but it doesn't matter per se what color these bars are either. We just want to make sure that the highs, okay, the high of this bar, the high of this bar, and the high of this bar are all lower than one another. That's it. It's just that simple. All right. And that's the go down scenario. So now let's flip it on its head. Let's turn it back. Let's turn it this way. All right. So now we get a bar, and we just want to see these lows. Okay. We just want to see these lows being higher than the first one. This low right here, that low right there, and that low right there. We just want all of them higher. It can go up. It's just that simple. It's not complicated. Now they're stalling at the back of this. I kind of think that they'll absolutely go right through it, but they're stalling at it. They're trying to offer back up. Let's see if that can work. But remember, now we got the H. All right, so we got the H here because we got this high, and this high. They're all lower than one another. It can offer to you more movement to the downside. You are getting a response here. You're getting a response here. This red bar, even though we went outside its low, that's why the text is here. Okay. This red bar, we closed above its high, closed above its high. It's saying that there's buyers here on the back of this bar. There's a response. Will it stay up from here? I doubt it. I think it'll fall through it, but let's see. Let's see. All right. Now here's the no close level. They got kind of close to it. You can see the initiative coming right back. Let's see if it'll drift down just a little bit more and then come back up and wipe this trend out. Let's see if it'll do that. Or will it just go right off of this trend? I do see that mid is above this bar's high. I see that. And if it's going to go up, then this bar will turn green. This will be a no close level. That will be the hard stop bar. See, there it goes. No box required. I know they should go through here. They should. But let's see. Let's see what they do. You got a no close level from up here. Okay, this is a no close level. So this price level is important, and there's the hard stop level. It can't be both. You can see they went under this bar and they coming off of that low, right under this bar. Okay, they went under it. It came off of its low. So you're seeing the price respond from this price level here. They're not closing under it as of yet. Want to see if they'll, turn back around from here and then possibly, come back down. Even if they just go right down into this area and then come right back up. I just want to see if they'll trigger this information here. Remember, we still have our trend distance down here. We do. Let's see which one they're willing to do. Let's see. So far, they're responding to this bar here. So far, let's see if they can get back through this high. They definitely went under our no close level. They did not hit the stop. I'll give it to you like this. Low, that's the L, 801. Low, 808. So they came in just a couple ticks above this bar's stop. Came just a couple ticks, and now they're turning around. They're triggering this stop. Let's see what they do here. Now, if you're looking for the two-leg removal, I'll touch on that because that's more along the lines with this H and L thing. That's more along the lines of that. So let's do that too. You can made a new high. Okay, so they made a new high. You can take out this. Okay, this information here. You can take out this. Just don't come back and yes. So this right here that created the new high. So that ran past this pivot here. Okay, so just don't take out this information here. So you get past this, just don't pass this, and let's go back up. All right, and that's the simplest way to look at the whole structure side of it. Just whatever breaks a high, just really simple. Whatever breaks a high, okay, you can, of course, you can take out, the pivot, after the break. All right, so if you break again, take out that pivot. Just don't take out this one. If you look back a little further, let's look at some of this information here. Try to give you some of that structure stuff. It's really simple. Try not to make it complicated. Please don't. You broke a high. Now, when I say a high, let's let it at least be, 3 bars. Well, this one only had one big one. That sucks. Well, either way, if you wanted to go up with them, if you just wanted to get in that, it's totally up to you. I like something with at least 3 bars. This one had the three. This only had one, so that sucks. But definitely, so from here, let's say you go with what I like. Let's go with 3, okay? Go ahead and throw something back there like that. Let's just do that. And then that now they shouldn't get all the way back here because then they'll make a trend. That'll be bad. But if you want something just a little bit more conservative where they just based out a bit, you can do that. You can say, hey, don't come past here. Even this information in here, if you want to go 1 bar, you can do that. I like at least 3, at least 3 bars of help. Because then they had time to accumulate a bit more. And this is a time one. This is price one. It's 2 different ones you're looking at. So this is a time one. These are okay. I just like this a little bit more. Just get people involved in that direction, then automatically run against them. So if you want to go with this, they didn't hardly spend any time here. But yeah, you can do that. You can break this, just don't break that, and they can turn around. All right, you can go with that information right there. Again, I like to see at least 3 bars. It would help because then of course you get another time frame involved, and so when it goes to take off, it should last a little bit longer. That's why I like the 3. That's all. It'll last a little bit longer if you get more people going in the wrong direction. That's all. So that would help. Now let's see. We're going to get a new high here, and they came right back up. So this trend right here is getting wiped out. Absolutely getting wiped out. I can tell you, I can pretty much bet you that was going to happen. Now let's see. I just wanted to see if they'll get under here and then turn around and come back up. That way they would have made the trend distance and then came back up and kept going, but they didn't want to do that. Now slope. Let's talk slope before I go. Let's talk slope before I go. Let me move this out the way so we can kind of get into a little bit of that. Look at the angle of this. No trend lines needed. Just try to touch on this too. So push here, okay? And this is kind of in there. We're gonna go with something like this. Push here, okay, and then you got this one here. Push here. All right. So the last 2 pushes is different than this information here. You're getting a little bit more here as far as waves. This one here is a little bit steeper than these. All right. Definitely steeper than this one. This one is actually a bit steeper than this one as well, but for one and the same, we can just say they one and the same. This one definitely has an angle on it that's a lot sharper. Okay, a lot sharper there. Now, you can tell that the sellers are getting just a little bit more aggressive on the push. Okay, so you go just from the top straight through the candles down to this low. All right, so now you get over here, not as aggressive, really aggressive. All right, so go down to the low, really aggressive. All right, so what's going to happen? Because now you get, two parties that's aggressive about what's taking place. One, see, now you're getting back aggressive. You won't as aggressive over here. All right, so what's going to happen? I'm not going to hold the video much longer. I want you to go back if you can, if you have the function to do so. Go and take a look at your Bitcoin chart from today and see what it would tell you. All right, so it's roughly about 1:30. So it's about 1:30. I don't have the bar time up here, but it's roughly about 1:30 Eastern Standard Time. Go back and look at your chart and just see what did Bitcoin do with this information here. What did it do? All right, and again, if you want to throw in the structure stuff, you can. They breaking a high, then come back and break that, and it still kind of go back to now. Just don't break this. All right, just go at it from that vantage point there. Yeah, so it would be just don't come back past here. We can go with that. They just broke a new high, so if they turn around and come back, you can see them maybe back under here. You just don't want them to pass here and see if they'll come back up. Just see if they'll do it. All right. Now, let's give it just another moment or so because now this mid is falling into this bar. Now, even though that price pattern is here because this mid got above here, even though the mid got above here, that midpoint is definitely inside of this bar. So, are they going to give you some more of this? Are they going to give you some more of this before the next push, or will they try to come back in? Let's see. Let's give it just a couple more candles. I want to see it myself. New high, and it's something I will tell you too. I'm going to let you know this if you're new to trading. Whenever you get a high, I'm gonna just draw this over here. Whenever you get a high, okay, and they go to break it, be prepared that they're coming right back. If you're new to trading, don't if you don't mind, don't get too eager about buying this break and don't stay in it too long when it happens. Just don't do that. All right. And if you get a pivot, let's say you're going down. If you're new trader and you know nothing, all right, I want to help you with something. When they break that pivot, whatever you do, don't stick around. And whatever you do, try to go ahead and book your profits unless you are told otherwise by the market. Because the market will tell you whether or not to stay in it or it won't. And it's kind of like the light switch thing. Apply the universal principle. Apply that method, the thing that I told you about, this information right here. Okay, we went over this before we kind of start talking about that. We went over this right here. Turn this upside down. Turn it upside down. If you see that mid above the high, it can go up. If you see this mid into this bar right here, it can come back this way. And so when they go to break those pivots, flip this upside down on its head. So you'll know not to still be in it, trying to hold it, anticipating more movement if that's not available. All right. So listen to what the chart is telling you. And it'll tell you when to get in and when to get out. It'll tell you. It will. And then just kind of draw a line in the sand also. You don't want them to do too much. Now, if you want to get closer, let's say you want to get closer and you don't want to do this broad swing stuff. They pushed, they pulled back, and they pushed again. You can pass this, just don't pass that if you want to get closer. All right. So you're looking for this zigzag. You're looking for that all the time. It's really simple. So if they come back down and you don't want them to get way back here, you don't have it to do that. Don't have the patience or the capital, however your situation is structured. You don't have it. Okay. Don't let them get past here. That's all. So look for that price pattern somewhere in here or just right here, maybe it'll turn around, go back up. Just look for the price pattern within here. Within here. If you don't see it in any of this here, and now in Bitcoin, we got a couple of price patterns here. You had one on the bottom, but you don't want them back here. You don't want them back here this far. So you need them to stop somewhere in this area here. They get past here, they may definitely come back past here. So this may be an option for you. Hey, if they were to have leaned back here, say they, not going to keep going. Let's just say they won't keep going, and they come back. We don't want them testing this one. That's not going to work. That's not advantageous to keep it up. But that's how you would do it. If you want to come closer, and again, me, I like, two or three. Well, I actually like two or three, but I like several. I can tell you exactly what would qualify as a great pullback and what don't. But just in essence of YouTube, hey, at least 3 bars would be fun. That would be fun, and then absorb it and let's take back off because you'll get a little bit more out of it. Now, put it in context. You got to do, momentum. This is momentum. How to read momentum without an oscillator. You don't need oscillators. Look at the chart. What is it telling you? When this scenario get flipped upside down, this is telling you that the momentum is shifting. That's all. So when this mid was inside of this bar, when this bar closed, when this green bar closed and that mid was resting inside of this bar, the market rests. It takes a moment before to get back on its way. I don't need an oscillator. Professionals don't need that. That's foolishness. All right. So read the information that's presented to you that's available. And I wish you all the best with your trading. Take care.